What's going on, guys? Welcome back to the channel. As shareholders of Sofi, you deserve to know exactly why Sofi dropped 10% today, the good and the bad that is associated with this. So that's what we're going to talk about here in this video. And unfortunately, people don't like to hear about war, Russia, Ukraine, but it affects your investments. So I must talk about that as well here in this video, as well as much more that we will cover later on. So hit the like button for me, subscribe to the channel if you have not already to stay up to date with everything Sofi that you need to know, as well as the broad markets and anything else that'll make you guys money, because that is the ultimate goal, regardless of what is involved with it, is to make you money. So let's talk about this. And first and foremost, why Sofi fell about 10% today is quite simple. So if we take a look at this, it says digital personal finance company Sofi Technologies agreed to acquire Technisys, I have no idea how to say that, a cloud-native digital multi-product core banking platform. Their shareholders will receive aggregate consideration of 84 million shares of Sofi, less than 10% of Sofi's fully diluted share count as of September 30th, 2021. So it's simply put, that's why you fell 10%, is because they're diluting the amount of stock that is outstanding by 10%. So that's going to drop the stock roughly 10%. It might be a little bit of an overshoot. I believe it's only about 8% of the outstanding shares that are circulating, but still, that's what the market tends to do. They tend to do things. But it says the shares have an aggregate value of 1.1 billion based on the volume weighted average price of Sofi common stock for the 20 trading day period ending February 15, 2022. The transaction will likely close by the second quarter of 2022. In quotes, the acquisition of Technisys is an essential building block in delivering on our member-centric digital one-stop shop experience for Sofi members and our partners through Galileo, our provider of fintech cloud services, said Anthony Noto, CEO of Sofi. The estimated incremental revenue from the acquisition, including base revenue of Technisys and revenue synergies from the vertically integrated capabilities, will likely add a cumulative 500 million to 800 million through year end 2025 as high incremental margins. So what that means is, obviously, they're going to add this revenue on top of their estimates already, but this is the key: high incremental margins. So if this was a low margin business, it wouldn't make sense to acquire this. If it fits with your product line and helps you to provide a better service or product to your customers, and it has very high margins, I think that is a good thing. And something that people need to realize is, when companies do this, you really have to make the decision for yourself if you think the management is doing the best thing for the business. And it's different from stock to stock or company to company, but Sofi has had a history of acquiring great things for their business. Look at Galileo. That was probably one of the best acquisitions you have seen in the entire stock market over the past 2 years. And it says right here, Sofi sees the shift in the vertical integration with Galileo to create 75 million to 85 million in cumulative cost savings by 2023 to 2025, and 60 million to 70 million annually after that. And Galileo, mind you, had about 30 million active users, and that's what powers the good old Robinhood card. I would bring it out for you guys, but I'm not sure exactly where my wallet is right now. Galileo, powers that. They provide the Chime cards. They provide services to a lot of different cards, and they have 30 million members. Now they have over 90 million members that are part of that in only 2 short years. So they have a history of doing what is best for shareholders and for the company. And to be quite honest, I think it's a little bit better to dilute the amount of shares you have rather than to pay cash for something in Sofi's cash burning state. So even though it's bad for the share price in the short term, investors will get over it. And eventually, I think it will benefit the business. And, Galileo, that was a great investment by Sofi. So I tend to think management knows what they're doing and that they're going to further make good acquisitions for SoFi. So that's basically what you guys need to know from that. I don't have any further projections as far as how that will actually affect the business or not in the long term. We'll have to just see it and how that plays out. But I have full faith in SoFi's management. And the second they start doing things that I don't agree with, I will let you guys know that. If I decide to sell out or whatever, I will also let you guys know that, because there's an aspect of investing where a growth company like this, you have to have faith in the management that they are going to do what is best for the business. And ultimately, you know, as a shareholder, you own part of the business. So ultimately, do right by the shareholders. Some companies I've invested in just don't. They start to do some really shady stuff, and I can't be a part of that. SoFi, I don't see this as a bad move for the business. I think this is ultimately going to be a great move for the business. So that is my take on it. That's exactly what is going on with SoFi today and why we dropped 10%. Without this, we probably would have been up substantially today. And the markets, like I said, they'll get over this pretty shortly. Now, as far as the Russia-Ukraine drama that is going on, before we get into that, let's just point this out. The oil price is near $100 per barrel, and stocks slide as Putin orders troops into Ukraine. And this came out 35 minutes ago. What I want to point out is that oil over $100 per barrel has always in the history of oil led to a recession. So if oil goes over $100 per barrel, it could be a fluke event, but it is always predicted a recession. So keep that in mind. Maybe a good time to keep a little bit extra cash on the sidelines or to buy very high quality companies that you can weather any pain that might be to come. On top of that, Blinken just calls off meeting with Russian Foreign Minister Lavrov. So that's another escalation to this situation. It says new Russia sanctions were quite deliberate to minimize disruption of U.S. energy costs. So that's also good for America, good for the world if you're a part of that. But I personally don't think they did enough. You also have Hungarian defense minister says the country will deploy troops near its border with Ukraine. It's really starting to sound like, you know, a new Cold War, possibly World War III. Hope and pray to God that's not the case. It says U.S. will move F-35 fighter jets and Apache attack helicopters to Baltics and Eastern Europe. About 50 attack helicopters in total and about 20 of these fighter jets. So not that good. But it says territory under Ukrainian control shelled 80 times Tuesday by pro-Russian region. So it's really starting to escalate. And the reason I even talk about this is because the markets are paying attention to it. And they are reacting. As well as that, we did get the sanctions that are right here. It says we're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russia's sovereign debt. That means we've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade in its new debt on our markets or European markets either. So they're limiting the financing that Russia can do. So that's ultimately going to hurt the economy a lot, but still kind of little too late at this point. We'll also impose sanctions on Russia's elites and their family members. They share in the corrupt gains of the Kremlin policies and should share in the pain as well. We've worked with Germany to ensure Nord Stream 2 will not move forward. So that's as far as the sanctions for the day. Some other things that did happen is that Putin asked basically their Congress, I'm not really sure what to call them. We're going to call them Congress for the sake of this. He asked Congress to authorize sending additional troops into Ukraine to across the borders of this region that they are now recognizing as its own government in eastern Ukraine. So basically, long story short, Congress has authorized them to take the rest of Ukraine if that's what Putin wants to do. And they approved that within like 20 minutes. So, you know how it is in Russia. They drink vodka as water. They just approve things. Whatever Putin wants gets approved. So be on the lookout for that throughout the rest of today and tonight. It's likely to see a lot more escalation. Probably not going to dial down the tensions for a little while longer. And you're definitely seeing the markets acting a little bit wonky today. You could see the SPY was down massively, open not too bad, only down about 0.4%, went all the way down to about 2% negative, rebounded, only closed down about 1.07%, and up in after hours 0.33%. So some awfully weird moves that we are seeing. And SoFi, that's where you just get SoFi, where we were actually down a lot more than 10% at one point today, and we did see a quite substantial bounce at the same time the markets did start to bounce, and then sold right back off again, up almost 1% in after hours. So that's looking good. We'll come back to the technicals in just one second. As far as the economic data that is coming out, you have at 8:30 a.m. on Thursday, so not tomorrow, the day after, GDP growth rate quarter over quarter. You do also have PCE prices quarter over quarter as well. Core PCE prices quarter over quarter. Real consumer spending, GDP sales, jobless claims, a lot of data that comes out at about 8:30 Thursday morning. And PCE is what the Fed pays attention to as far as a core inflation metric. So if these numbers come in high, I do expect the markets are going to react negatively to that. If they come in good, the markets might actually bounce off that. But tomorrow, the headlines and what is going to move the markets all comes down to Russia and Ukraine. So it's going to be a very volatile period here in the markets. But think about this in a weird analogy, like your Thanksgiving Day plate, right? The Fed is like your turkey, and your Russia-Ukraine drama is like the potatoes, right? The main dish is going to be the Fed. That's what can crash the markets. That's what can cause fear or boost the markets up. Russia is really the side dish here, so don't get carried away. It's still the Fed that has the biggest weight in the markets, not the Ukraine-Russia drama. So that's really what you guys need to know as far as that. As far as the option flow sentiment, this was very interesting. You're seeing 75% positive order value for the day, 11 orders totaling $4.91 million. So that was very interesting. I did not expect to see 75% positive order value, and that is a very good sign considering we were down 10% today. Even more than that at points. That's showing you that people are really not jumping to buy puts on SoFi. They're really going long on the stock in the form of options. So that is looking very, very good. As far as the short interest, that's sitting at 19.34%. Current shares that are sold short of about 120 million. Cost to borrow max of 2.32% and the utilization of 97.28%. Days to cover at 2.7. So that is also looking prime for a short squeeze. If we do see some bullish activity, it's going to be a little bit harder to see that violent move to the upside as far as shorts covering, because of this dilution news that we did get today. But regardless of all that, we're seeing a lot of support at $10 per share. If we see a lot more fear in the markets, I do expect to go under $10 as low as $8 per share. I would welcome that. If you're a long-term investor, you should also welcome that as well, because SoFi is a great business and you're able to acquire it for a cheaper price. If we do make a move to the upside for whatever reason, doesn't look too likely in the near-term future, in my opinion, we have to break out above $12.11. That's the 20-day simple moving average in between the Bollinger Bands, and then the 50-day moving average at $13.53, and then the $14 price. So two resistance levels between now and $14. If we break out above 14 because earnings are March 1st and they surprise everybody and give out good guidance and expectations, you could rally straight to 15, 16, 17, 18. Really, anything is on the table in this market environment. So that is going to be all for this video. I hope you guys got some value out of it. If you did, hit the like button for me, subscribe to the channel, and make sure to comment down below. Appreciate you guys, and I will see you in the next one.